Rick Santelli is standing by at the CNBC in Chicago. He's got some breaking economic data. Rick, take it away.
Yes, and obviously post-COVID, these numbers come out in spotty sorts of fashions. Retail sales for the month of April, headline number, expected to be up 1%, is unchanged. But it shouldn't be shocking, and it shouldn't be shocking that in the rearview mirror we had 9.8, slightly revised to 9.7. Because whether you're looking at March, which I just referenced, or January, which was 7.6, it correlates with when the government sent out the stimulus checks, the direct payments. And that's when the retail sales jump. So this should be expected. Ex-autos and gas is down 0.8, and that follows down 8.2. That follows up 8.2, which was also, of course, due to the checks. And if you look at the non-check months like February, it was down 3.3. Now, that's all the data out. I don't see all the rest of the retail sales, but let's go to import-export prices. And, it suffers from the same issues that inflation does. That if you look at year over year, so in March of 2020, April, May, June, July, you had real extreme things going on in the economy. So the rate of change of anything month over month beyond March and April and June of 2020, well, we're well past that. So as you look at import price month over month, up 0.7. If you look at ex-petroleum, up 0.7. But when you start looking at year-over-year import prices, all of a sudden, it's up 10.6 because you're comping to big, big, big negative numbers. And if you look at year-over-year exports, same dynamic, up 14.4, and month-over-month's only up, as expected, 0.8. All right, retail sales, autos is out. That's 0.8. Ex-autos and gas, I had down 0.8. And here's the one I was waiting for, the control group. This gets plugged in other data points higher up the food chain. That control number is down 1.5, and that also is to be expected. And do remember that ultimately we're going to start to smooth these numbers out a bit because the service sector number is going to be coming back online with a vengeance. Andrew, back to you.
Okay, Rick, thank you for that. Have a great weekend. Steve Leisman joins us now with his take on all of this. Steve?
Hey, good morning, Andrew. This is an interesting number. This is kind of all over the place a little bit. Motor vehicles and parts up 2.9%. Electronics and appliance stores up 1.2%. You had health and personal care service up positively. But the negatives, starting with gasoline station sales, that's not going to be around for a while. That was down 1.1%. Clothing and clothing accessories down 5.1%. Not quite sure why. And sporting goods, some of the discretionary stuff down. I think the story here is pretty simple. We had a huge surge in March. Those gains didn't continue into April, but we didn't have to do much from a GDP standpoint to keep it high because you get up to the level and you want to stay at the level. Rick's right. You have a slight decline. That number minus 1.5, which is the control group, that feeds into GDP. So it's a little bit less, a little bit lower. But the more important story here, guys, and again, we'll talk about this more on Monday, is this economy is about to change in a big way. You've had almost all of the extra money that's been out there going into the goods sector. It's about to shift into the service sector, and only some of that shows up in something like retail sales. For example, you have the food services, drinking places up 3%. There's a whole lot of stuff, though. I think goods, the retail sector is only about 30% of consumer spending, and now you're going to shift to services, and it's going to be tough, Joe, in order for the market to follow how consumers are spending because we don't really have very good measures on services. But you can imagine that people will be going out for haircuts and doing stuff they didn't do before and not buying as much in the way of goods.
Shepard Smith here. Thanks for watching CNBC on YouTube.